In the last year in my dividend portfolio, I have been trying to find the best of the best quality companies that I can hold for the next 40 to 50 years that I eventually can reinvest my dividends and let compound interest do its work and live off of those. In the process, I have transparently shared some companies in my portfolio that I had previously owned and bought that no longer meet those requirements in the portfolio and that I have rather sold out of at a loss, and shared my lesson on that investment itself with you guys here on the channel. So today, I'm going to be sharing a few companies in my portfolio right now that I'm considering selling out of. I'll be sharing my bull and bear thesis and what I would possibly do with the capital otherwise. I'll share my reason and what I possibly messed up in my investment in the first place and my thoughts for the future. And if you guys appreciate the transparency and me sharing my lessons that I learned, it would mean so much if you could hit that subscribe button for me and turn on post notifications. With all that out of the way, roll the intro.
Hello, I like money.
Alright, to start off, the first company that I'm sharing that I'm considering trimming is 3M. 3M is a company that I feel 5 or 6 years ago, every investor was bullish on for the long term. Millions of people use 3M products every day, and there's a saying you're never 10 feet away from a 3M product. Unfortunately, you're never 10 feet away from 3M's free cash flow being positive either. 3M's free cash flow has been negative and is declining, and with the recent lawsuits they've had, that's going to eat in their profits for the next few years. Currently, 3M is trading pretty much at a 10-year low at $88.68. 3M was a company that I bought on earlier in my investing journey, and I just planned for it to be utility or some industrial exposure, and one of those companies that's not going to go anywhere, and I get a solid return. Unfortunately, the only return that I've gotten with 3M is my ego's return to earth, as the stock has pretty much crashed over 50% since I bought in at the $150 and $140 range. Now, I hate selling companies at 52-week lows, and that's a big mistake that I see a lot of investors make, and that's how you lose money over the long term. If you guys watched my video on the Cash Flow Kings channel, link in description last week, you guys would know that I trimmed my 3M position. With 3M right now, what I'm doing is I'm looking at the shares that I reinvested back in the $100 range, $110 range, and I'd basically be selling out at a 10 or 15% loss out of some small capital and trimming my position. I recently trimmed the dividends that I've been receiving from 3M over the last year or two, and I put it into some better opportunities in my opinion. To see those opportunities, you can go in the Discord link in the description or watch my portfolio updates every month. 3M's actual business is doing fine right now. There's been no crazy sales decline or whatever, but at the same time, those lawsuits are eating into profits and their free cash flow is not looking great for the long term, and there's a chance they do cut that dividend. As I mentioned though, I hate selling stocks when everybody's negative on them when it comes to sentiment, and I feel it would be irresponsible of me as an investor to possibly sell out. With that said though, if I were to sell out, there would definitely be opportunity cost in the sense that I could put it in some really high quality positions that not only do I understand the business a lot better fundamentally, but I could get a better return over the long term. Right now, I'm really deep when it comes to my 3M position. You guys know me, free cash flow is the most important metric when looking at a company, and you guys can see since 2010 pretty much 3M's free cash flows fell out flat. This is just not what you want to see ideally from a company. Yes, it has been producing large, consistent amounts of free cash flow, which I guess is appealing for a lot of older investors, but that free cash flow is not looking to be growing anytime soon, especially with the losses as I mentioned, with a 3-year CAGR of negative 9.99%. A 5-year growth rate of negative 3.58%, and only a 10-year growth rate of the free cash flow of 2.13%. If you would have put that money into a company like Visa, not only would you have a much greater total return, your shares outstanding that you would have bought in at the time would have been down, and your yield on cost would be up. So with 3M, it's a weird position that I'm in right now. I really don't want to sell out at 35 or 40% loss and sell out at the bottom, especially when everybody's sentiment is low, but at the same time, I can only see so much growth in the future. I will say 3M could be one of those companies where I could just close my eyes, hold, and pray, but at the same time, there are other opportunities possibly in the market. I wouldn't count out selling out of my 3M right now. I'd hate to sell out at a 40% loss and sell out at the bottom though, as I mentioned. So out of all the companies that I mentioned today, 3M is probably the one that I'm most likely going to hold on to. With that said though, I'm likely not going to be reinvesting dividends for now and putting that capital elsewhere. Alright, the next company that I'm considering selling or trimming in my portfolio is Johnson, stock ticker JNJ. Right now, I own roughly $600 or $700 worth of J&J in my portfolio, and I am down a little bit on the position, but it really hasn't done much over the 2 years that I've owned it so far. Johnson & Johnson is one of those companies. It's kind of like 3M, Coca-Cola. It trades at a premium. It's not going to be going anywhere. With that said, though, there are definitely better opportunities for growth. Right now, J&J is trading at $156.85 per share with a dividend yield of 3.03% right now. Johnson & Johnson's dividend growth has not been anything spectacular whatsoever, pretty much a dividend growth rate of 4% over the last 5, 6, 7 years. J&J has pretty much been trading flat, and I just don't see a crazy bull thesis for the long term, and I definitely think that there's better companies out there that I could be investing in. Of course, there is a little bit of a hesitation out of selling out of such a quality company, a mature company, especially like Johnson & Johnson, and usually the slow, boring growing companies are the good ones at the end of the day. With that said, though, I need to look at opportunity cost and over the long term, what's going to be the best grower for me. Taking a look at Johnson & Johnson's earnings per share growth rate, it has been nothing crazy when it comes to that either, but the earnings are consistently growing. They're large, and I think that's just really appealing for older investors. But for me, I don't know if that's particularly what I want. And moving on to Johnson & Johnson's free cash flow growth rate, it has been nothing spectacular either. Their 5-year growth rate of the free cash flow is 2.66%, and the 10-year growth rate is 2.5%. I don't think that's very good overall. So Johnson & Johnson is definitely a position that, looking at the business itself and their growth, it's definitely a company that could be on the chopping block. The only issue, I guess, for me could be valuation, but it honestly is one of those scenarios where I may have to just rip the Band-Aid, accept the 2.5 years that I held the stock was kind of a waste of time, move on, and put it into a really high-quality business when I see fit. And the last company potentially on the chopping block is Realty, not Reality Income, stock ticker O. Realty Income is in no way whatsoever a bad business, fundamentally speaking. With that said, though, when actually looking at their business, I do have questions over the long term about their growth and how rapid it could possibly be compared to other investments that I can make. The growth is nothing spectacular, but it is a staple of a company regardless. With Realty Income, it would really have to come down to opportunity cost if I were to actually sell at these prices. I think it's really cheap right now, but if Realty Income were to get to $60, $65 range, I would definitely consider trimming my Realty Income position. This isn't more of a case scenario of where Realty Income itself is a bad business, rather that the growth is just limited at the point where the company's at right now. So with Realty Income, it would have to be at the right price for me to potentially sell. If it got up near that $60 range, I would definitely consider trimming. Or if Visa or Starbucks were to crash like 25% tomorrow, I would probably sell out of my Realty Income position and put it into that. At the end of the day, selling stocks is something that I have adapted to in the last couple of years when investing. When I initially bought these companies, I planned to never sell them, but now I'm starting to mature as an investor and realize that there are better opportunities for me over the long term. These companies are in no way bad whatsoever, but at the stage that they're in and how old they are and how mature of a companies that they are, there's only limited growth for them in the future. And for me, I want companies with pricing power, a moat you could even say, and good growth ahead of them, and companies I can just envision being complete players in the society for the next 40, 50 years. I want to thank you for making it through the end of the video. This is the best way to actually support me, but if you want another good way to support me, make sure to check out becoming a channel member today for only $5 a month. Get access to exclusive episodes, some cool perks on the way soon, and a lot of behind the scenes action. So if that intrigues you, go check that out. Links in the description. Thank you all for watching. Make sure to smash the like button, subscribe, check out the Cashflow Kings channel, link in the description, and of course, do dividend stocks, not drugs. Have a good one.